So insurance basically covers you for any damages that you may have. I know it's a broad subject that you've given me, but it normally covers you for any damages that you may have to your possessions, your assets. Now in terms of, so that is a general thing. I mean, there's also health insurance and medical insurance. Of course, it covers you in the event of injuries or any sickness. So as I said before, normally home insurance covers losses and damages to your home and personal belongings, and it protects your assets from any liability claims. So typically damages caused by events are called perils, because sometimes persons don't really understand what perils are. So some of these perils are of course fire, hurricane, windstorm, riot, strike, water damage within your home, flood, but of course flood, it's defined as flood caused by a hurricane, one of those perils, and of course theft as well. So first of all, you need to have enough homeowners insurance to rebuild your home, replace your belongings and your contents of course, and cover injuries and damages from any liability or suits that happens on your property. So how do you know how much coverage? I mean, that question is just been going around over and over and over again. Ideally, your property should be covered equal to your home's rebuilding or replacement cost at 100%. So I'll break that down a little bit. So this should be done on a rebuilding cost, which of course, as I mentioned, is sometimes called replacement cost, not your home's selling price, and which is also known as a market value. So the cost of rebuilding could be higher or lower than your selling price, than your property's selling price. Of course, depending on the location, the condition of your home, and other factors. As insurance companies, we tend to ask our customers to provide a recent home appraisal based on 100% replacement costs. And of course, we do, advise that you get this from a reputable surveyor. And this should be reflected as 100% replacement cost, as I mentioned before. So what we do, we use that appraisal. It's based on the square footage of your property. And it's also based on your porches, your garage, your cistern. And what the surveyor does, they measure your property. So if you have a plan, a home plan, that is very helpful as well. You don't always have to have an appraisal, but if you have a square footage, as the insurance company, we can use that. And we work based on a cost per square foot. So for example, if you have 3,000 square foot, we will use a base price. We'll multiply that and we will tell you, okay, this is the amount it would take to rebuild or repair your home in the event of a total loss. And that's how basically we try to calculate, how much insurance you should have. For a recent appraisal, I would say the general industry standard is between 3 to 4 years. I wouldn't say more recent than that. So I would take a benchmark of 3 years, maybe up to 4 years, to get an idea of, what the cost to rebuild. Because there are also some factors, such as like inflation, the cost of living index. Those things also affect the price. So within 3 years, you should have a pretty good idea, how much your building would have been valued as at that time. Okay, that's a very, very good question, one that we get asked lots of times, because as you would know, insurance premiums are not cheap. And further to the hurricanes, across the industry, there was a general rate increase, which some persons, as of today, still find it very, very hard. So, we consumers are always looking for ways and means in terms of lowering your premium. So one of the, you basically said quite a few in that, but one factor is ensuring that your home is protected through hurricane impact windows and doors. that helps you an insurer to offer as a factor a lower or a discounted premium. There's also things like fire extinguishers, because we just tend to sometimes focus a bit on hurricanes because of course we are in a hurricane zone, but there are also prevalent factors such as fires, and fire extinguishers are also a very good tool to have. They're burglar alarms, with the recent increase, I wouldn't say recent in terms of homeowners, but there have been in the past, break-ins, not only to your home but also to your businesses. So camera systems, burglar alarms, all these factors are very, very good. That you can help save on your costs. Build smarter, build stronger. Yes, you may look at in terms of retaining walls. That is something that we've talked about to our customers. I know it's costing, but try not to skimp on the retaining wall. It's a valuable asset to your property, especially for floods that can come about from the hurricanes. So all of these factors, building strong, building smart, building with different materials, concrete houses tend to, of course, get a better rate than wood per se, and that's because of various factors. So once we have, these different structures, you can save. There's another important thing as well to save on homeowners, which is increasing your deductible. Or your deductible is also known as your excess, or the amount that you will stand in the event of having to make a claim. Normally across the industry, 2% of your sum insured is your deductible. However, you can increase that to maybe 3, 4, or 5%. That also helps to lower your premium. But bear in mind, when you increase that, you have to make sure that you have your little fund stocked away somewhere in the event that you do have to make a claim. So one of the things with deductible, first of all, is knowing your deductible. I know most consumers tend to just focus a lot on the premium, how much is it you have to pay, but you also need to know your deductible amount. So if it's 2%, $100,000, you know very well that you have to $2,000 is what you have to stand in the event of a claim. So self-insuring is something that I've often, spoken to clients about. It's based on your financial position. We're not going to encourage a client just to save on premium to take a 5% deductible if you know that client, cannot really afford it. Because one of the things is that your deductible only comes into play when you have to make a claim. When you have to make a claim is when you need it. So you always have to bear in mind at that time, that's when you really, need that money. Do you have that 5% or, $5,000 as the case may be if it's $100,000 stashed away? But we do have clients who, are very secure based on their position, their financial position. And they said, yeah, sure, we will do that, if it will give us a percentage down from our premium. But as I said, it's always based on your financial position. If you can take on that extra 2 or 3% as your own risk, then that's fine. Go straight ahead. On the insurance, that word I think was the buzzword after 2017, where lots of persons who were not told or did not understand what on the insurance meant, where it was brought to the forefront. So basically taking out less coverage just to save premiums is not going to help. It can end up costing you and your family in the long term. We did mention that, to put it simply, on the insurance comes into play when there's insufficient coverage that leaves you as the policyholder responsible for a large percentage of a total or partial loss. So if there's significant damage to your property, the insurance payout may be less than what it would take to rebuild or repair. And that's why one of the reasons we tend to push for 100% replacement cost when you are insuring. Now, if you can permit me to just read a little article that I have about Uninsurance, it can have wide-ranging impacts, from creating heavy financial burden on families to financial hardships and challenges in the event your payout is not sufficient for your needs. For example, if your home was damaged by hurricane or fire, you could find that you have inadequate funds to repair your building or replace your furniture and contents. Underinsurance can also lead to a wider social and economic costs, forcing government to cover expenses through provision of welfare payments and grants, and to provide services with taxpayers' money. Now, I say all of that to say how wide-ranging underinsurance can be. And from an insurer perspective, it is something that we don't want anyone to go through. So what we tend to do is every year or every 2 years or 3 years, we ask you, again, coming back to the appraisal, to get an updated valuation. Yes, it can cost a little bit first time, but as the years go on, it is easier to get a revised appraisal. So why we ask you that is because we always want to make sure that you are up to date with your sum insured. What we had back in 2017 was a lot of policy holders insured back, say, 10 years before, but never increased their insurance. So what happened is that you have costs of inflation, you have construction costs, labor, materials costs. These things increase every year. So therefore, if your building was $100,000 in 2000, in 2017, 17 years after, it would not be $100,000 to replace or rebuild in similar fashion. So that's why we always encourage persons when they renew their insurance. Insurance is renewable annually. So when you renew it, just take a look at your valuation of your building. Is your sum insured adequate? Would you be able to rebuild or replace with $100,000 10 years later? Your contents, I know we focus a lot on the property side of it, but we also have contents and personal belongings. Persons buy furniture, different personal effects year after year. It builds up, it costs. And that also is, you can also insure that. That's part, it's not a standard home policy, but it's part of the coverage as an optional coverage that you can insure. So once you take account every year and you look at your insurance and you said, okay, this is fine, I can work with it, then you should not have a problem of insurance. Why do people buy liability coverage? So persons buy liability coverage. It is part of their homeowner's package, but it's something that you really should know what it is that you're buying. It's mainly to protect your assets, of course, in the event of lawsuits for negligence on your part. Now, you should always make sure that your home insurance have enough liability coverage in case you're found negligent in causing injury or damage to another person while they're at your house or your premises, rental apartments as the case may be. So what happens is that this liability covers and provides legal representation if you are sued, and helps to pay judgments if you are found responsible for injury or possible death. So for example, some homeowners love their pets, and that's a typical example that I would give in terms of a lawsuit. So you have your pet, you invite a guest to come visit you, but due to your negligence, you did not chain up your dog. And of course, Fluffy, if I can call him that, runs out and his way to greet your guest. But Fluffy bites your guest because your guest is probably afraid of dogs. And has your guest on the ground. By the time you hear the screams and you're outside, Fluffy is having a field day. Now, this coverage, liability coverage, can prevent you if there's any judgment. So your guest can now sue you for coming on your property and your dog bit them. So this is just one of the examples of where liability coverage comes in. There are many other examples that I can give, but for the interest in time, I will just use that as one. There are things like, for example, rental apartments. You know, if you're doing any repairs to these apartments and there are persons living on it, please make sure that, you know, your construction material is packed away properly. Do not leave, you know, pieces of wood around for your tenants can come and, you know, trip over the wood, and next thing you know, you get a lawyer letter the next day. So having liability insurance as part of your homeowner's package is very, very important. But I do hope that this, you know, raises your awareness as to what your home insurance or your property insurance covers. So yes, the optional coverages that we have, which are available, are, as we mentioned, contents, of course, your personal belongings, and additional living expenses. I'll just break that down a little bit. We all know what our contents are. Our personal belongings, we may have, you know, depending on we may have sports equipment, we may have fishing equipment, we may have bicycles, you know. We also, those are insurable items because they're persons, I know, especially certain cyclists, you know, they pay thousands of dollars on their equipment. So we can have that insured as well, but it's as I said, it's optional, so you will have to tell your insurer, okay, I have additional stuff. You know, jewelry is one of the things that it's very popular to insure with homeowners. We also additional living expenses that I briefly touched on. So that came into play a lot after the hurricanes, when persons actually saw what that coverage did. They may have had it, but they did not know. And what that does basically is that in the event you have to move to a temporary living facility while your home is being repaired, there is coverage under your policy for it. You obviously have to find out how much you're covered for. So if it's, for example, you had to move for 6 months, there may be coverage for 6 months rent that you may have to pay, or if you're going to a hotel, there may be coverage there. Now this coverage is not exhaustive. There is a cap on these coverages, so it's up to a certain amount, but that amount can be increased as well. So I would urge persons to also explore the possibility of adding additional coverages to your policy. It kind of goes together, additional living expenses, loss of use, because there are also cases where you may have a business or a small business that operates from your home as well. So you would have things like rent, where you will, or you may rent out an apartment downstairs from your home, and you are also entitled, once of course you provide a contract, a rental, a tenant contract, you can get that as part of the expenses on the loss of use. Well, I would just like to commend Money Matters for putting on this, BVI for putting on this program. I think it's so apt, and of course with the attention with the fiscally fit men, that this will come in very handy and would, make you would be more aware of what home insurance is all about.